780 Now exclusive, Sajid spoke with Gaurav Lohia, who's the whole-time director, and Anupam Agarwal, who's the chief financial officer, to understand the company's growth roadmap, expansion plans, and IPO strategy. Let's listen in.
We are a machinery manufacturing company operating in the field of technical textiles, having various packaging and non-packaging applications. So some of the packaging applications where our machines are used is packaging of cement, fertilizer, chemicals, agro-produce, sugar, etc. It has various non-packaging applications as well, which goes in geotextile, logistics, tarpaulin, for example, roof underlayment, pond liner, etc. So we are a machinery manufacturing company for these sectors. We operate both in domestic sector as well as export sectors. We export to more than 100 countries worldwide, and exports contribute a substantial share to our revenue.
Okay. Mr. Agarwal, can you give us a sense of the revenue breakup in that sense? Exports is a large component which is coming in, as Mr. Lohia said. How much of exports contribute to your revenue?
So we try and balance domestic and exports. We have been doing, in the past, we have done around 60% exports also. But last year, because of West Asia related thing, the export was around 43% out of the total revenue that we did.
And on an average, how is it actually? Normally, export component is what percentage of your revenue?
So it is a balance between, it hovers around 45 to 55% every year. Since India is a dominant market, so we try and have a dominant share in the domestic market, but exports also contribute significantly every year.
Mr. Lohia, give us a sense of the kind of challenges that you have seen in the last 1 year. You had the tariff issue which came in last year, then you have the West Asia crisis which have come in. How has it impacted your business from a cost escalation point of view or from a trade point of view?
So the tariff business, the tariff thing did not impact our domestic business as such, or the raffia machinery business as such majorly. It was only little minor hiccups. But our subsidiary in America, because of the tariff issue, faced less investment, saw less investments there in their markets of America and China. And so that was a little subdued last year. But overall, the tariff impact, and our customers were also in a wait and watch mode, but it did not impact us in a major way.
Mr. Agarwal, give us a sense of the kind of debt which is there on the books as of now for you.
So debt is around 150 odd crores. This gets naturally repaid in the next 2-3 years. This debt was taken 2-3 years back when we expanded our capacities.
Mr. Lohia, you're coming out with an OFS and you are in a segment which is growing on a fast scale. Why haven't you raised growth capital? Do you have enough capacity going forward?
So yes, we have enough capacity going forward. We are currently operating at a capacity of around 75%. And we don't envisage a major capex in the next 2 years going forward. And whatever capex requirements that we have are generally internally funded. We are a cash-generating company. And the OFS is also to give some exit to my extended family members. And there are some philanthropic objectives as well of the OFS.
Mr. Agarwal, give us a sense of your margin profile here, because for FY26 it's around 18.5. It has come, it's risen from nearly 16% in FY25. In your business, what is the kind of nominal margin that you can see?
So from a sustainability perspective, we should consider 20+% as our EBITDA margin. From financial year 25 to financial year 26, operating leverage has helped us to achieve 19.5% in financial year 26. As exports share grow in the revenue, we believe that the revenue, the operating margin will keep on inching up.
The RHP had only consolidated numbers for the last 2 years, FY 25 and 26. Is there a reason why the numbers are consolidated only for the last 2 years?
So there was a demerger that happened. Let me explain this. There was a demerger in the company that happened with effect from 1st April 24. So we have presented 1 year carved out financials from the demerged company to give a 3-year perspective to the investors.
Okay. Give us a sense of the kind of order book that you have at this point in time, given that you have 45% coming from overseas and you have remaining from domestic market. What kind of order book that you have?
Okay. So our order book at the end of March FY26 stood at something like 1,350 odd crores, and it constitutes a healthy domestic book and a substantial amount of export order book. So I think the division would be around 65 to 35. And going forward, so we see our order book maintaining its pace.